Last time I talked about benefits for Canadian seniors. Today I'm going to talk about income taxes in Canada. Taxes in Canada are as numerous as the snow in the country. Sales tax, land transfer tax, liquor tax, gas tax, and custom tariffs on imported goods and property taxes, and also car sticker taxes. In addition to this, income taxes. It would take hours of video to talk about Canadian taxes. So today I'm only going to talk about income taxes in the country. Canadians have a joke that nothing is permanent in this world except death and taxes. Before we talk about income taxes, let's first look at why people in a country have to pay taxes. In fact, there's a famous saying that taxes are the price we pay for civilization. It is because of this tax money that we get everything we need in our lives. For example, economic development, national security, schools, libraries, health services and hospitals, roads, bridges, police, ambulance and fire services, parks and playgrounds, garbage and recycling collection, wildlife conservation. Also, the government redistributes most of these taxes to low-income families and vulnerable Canadians through child benefits, employment insurance, old age security and social assistance. The average Canadian family receives about $41,000 in public services each year, which is a tremendous value for the vast majority of Canadians. They also invite refugees from all over the world to live in Canada and take care of them until they get back on their feet. In fact, many Canadians don't have any reluctance to pay taxes because of the benefits they receive from paying taxes. It is because of these taxes that we are able to live in a prosperous nation. Now let's look at income taxes in Canada. Canada is a country with a progressive tax system. This means that the tax rate you pay increases as your income exceeds certain limits, like the steps on a ladder. Under this system, income is divided into different categories and the applicable tax rate is determined. In Canada, there are separate tax rates for the federal government and the provincial governments. For convenience, I will only talk about taxes in the province of Ontario today. Another unique thing is that the Canadian system is based on trust, although CRA, Canada Revenue Agency, knows a bit about the income of people living in Canada. They often rely on individuals to accurately report all of their income. You must report all income and also list any expenses you may have that are eligible for tax deductions. This process is called tax filing. Who has to pay taxes? You don't have to be a Canadian citizen or permanent resident to pay taxes. Filing taxes is responsibility of everyone, including Canadian residents and immigrants, international students and new arrivals, including temporary foreign workers. Tax filing is mandatory regardless of income, otherwise they will not be eligible to receive government benefits, especially child benefits and other benefits. Failure to file taxes can lead to serious financial and legal consequences. The government only looks at for 3 years, then takes legal action. They have to pay the taxes owed to the government along with interest. Some of the payments that low-income families receive are Canada Child Tax, GST, HST credit, Goods and Services Tax, and Harmonious Sales Taxes. Guaranteed Income Supplement. It is for Canadian low-income adult supplement. Ordinary individuals should usually file their taxes before April 30th. If that day is a holiday, the next working day is the last day. However, for businesses, this date is June 15. The government needs to file taxes on time and pay taxes on time. Otherwise, the amount will have to be paid with interest. But there are some incomes Canadians do not have to pay taxes. Many lottery winnings, many inheritances and gifts, Canada child benefit payments, GST, HST payments, payment from a life insurance policy, full-time school scholarships, withdrawals from a tax-free savings account, TFSA, strike wages with the union. Actually, there are several ways to reduce these taxes. One of the main ones is the RRSP, Registered Retirement Savings Plan. Within a certain limit, Canadians can save money to benefit from during retirement. Since the amount is deducted from his annual income, he does not have to pay taxes on the money he deposits. By the time this person turns 70, when he wants to withdraw the money will have grown into a substantial sum with interest. At 70, when you withdraw the money, you have to pay taxes on it as income. By then, since the person is retired, their income is much lower. So so their tax rate is much lower. Therefore, they have to pay very little taxes. There are other tax deductible investments like this. For example, the first home savings account, which allows first-time home buyers to save up to $40,000 from their income without paying taxes on that money. Also, if you have a business, you can significantly reduce the tax rate by converting it into a corporation instead of a sole proprietorship. Another way to reduce the amount of tax you pay is to notify the government of acceptable expenses. There's a myth that the original settlers of Canada do not pay income taxes. First Nations people are subject to the same tax laws as any other resident of Canada unless their income qualifies for tax exemption under Section 87 of the Act. In countries with high income taxes, even low-income people have the human need to afford a comfortable life with basic necessities. Especially in Canada, when you get sick, you can see a doctor whether you have money or not. If you lose your job, the government provides a percentage of your income until you find a job, or for 9 months. The data shows that the top 20% of households which earn less than half of the total income, 46.4%, pay about 2/3, 62.7% of federal and provincial income taxes. Compare the bottom 20% of households paying very little percentage of in their personal income taxes. This has led criticism of Canada's high income taxes. As income increases, people fall into higher tax brackets, and the Canadian tax system is said to be overly complex and punitive, discouraging competition and entrepreneurship. This means that this tax system is an obstacle to the competition to make one's business very successful or to get a job that pays a lot of money by getting an education. But let's see how fair this argument is. Are there any reasonable grounds for excluding a person from that competition due to this tax system? Even after paying high income taxes, is the status or standard of living of the entrepreneur and the employee under him the same? Does the employee have the opportunity to be absent from work as much as the entrepreneur does? Except for limited amount of leave, he or she is required to go to work. Even after paying high income taxes, their income levels are at such a different level. Moreover, the employee is an essential factor for the survival of the entrepreneur. Therefore, there should not be a huge gap between these two parties. If professionals are analyzed in the same way, can people with higher education and high-paying jobs be compared to those with minimal education? Even after high income taxes, their incomes are not at the same level. Many people with minimal education are engaged in manual labor. Over time, their physical labor takes a much greater toll on their health than those who work mentally. Whether they want to or not, reporting for work is essential. It is a very naive argument to say that someone cannot pursue higher education because they are caught in a high tax bracket. But it is not unreasonable to say that by reducing this tax rate, the government can help stimulate economic growth by improving incentives for individuals to engage in productive activities such as work, entrepreneurship, and investment. The country's politicians say that the wealthy Canadians do not pay their fair share of the income taxes. But a former Prime Minister once said that about 40% of Canadians do not pay income taxes. The reason for that may be that they receive more in benefits than they pay. Moreover, a society with high economic inequality is not safe. It leads to reduced social cohesion, reduced trust, poor health outcomes, and increased social unrest and violence. This also contributes to rising economic inequality, mental illness, and interpersonal violence, and reduces access to essential services and opportunities, which can fragment society and reduce overall social well-being. Can we say that the Canadian tax system is unfair? Also, anyone who wants every human being to have a minimum living environment cannot call Canadian high taxes unfair. See you again in another interesting video. Thank you.
Okay.